Okay, guys, so this was more or less the explanation of what happened on today's trade. Okay, let's see. Okay, now let's move on to imbalances. Okay, and let's look at the most important things you need to know about imbalances. Okay, you don't need to know everything, but let's look at the most important things. Let me open GBP USD, for example. You will find imbalances on any chart, but just because I have gold analyzed already, let's see. It's been a very, very long time I haven't entered this chart. Very, very long time. Yo, look at what the zone I had. Okay, let's look at what imbalances are. Let's go on to, let's see, 4-hour time frame, for example, okay? An imbalance basically is when price, okay, let me delete absolutely everything. So an imbalance basically is when price takes off, okay, on a sudden direction, and basically it creates, they call it, technically it's called a fair value gap. Okay, so it's basically a sudden move in price, okay, where price is just, there's too much demand, sorry, or too much supply, okay? Here, for example, we have an example. Let me cut off the chart right here. For example, how to identify the imbalances, okay? When price creates an indecision candle, for example, here, and then creates a very long bootleg, okay? A very strong candle. This is what is shown on the ebook, okay? Here, if you see price on this candle, there's only seller's pressure. At any point, price has mitigated, okay, or has left like any candle or anything mitigating up until the indecision candle, okay? It has created right here a fair value gap, okay? Has created right here a fair value gap. From the indecision candle, you see this big bootleg, okay? Creating this fair value gap where there's only seller's pressure and the market needs to get optimized, okay? So then you're expecting for price to mitigate this imbalance, okay? For price to fill this imbalance until the indecision candle, okay? That's what typically price will do. Okay, so then if we hit the play button, okay, as you see, price fills this imbalance, okay? It mitigates all of the seller pressure, okay? We have this indecision candle, which this would be our supply zone. And then let's look at how price then reacts from the supply zone. Okay, this is what we are basically looking for all the day, okay? Mainly, price creating an imbalance. We are waiting for price to mitigate this imbalance. And then we are looking for the supply or demand zone above it, above or below it, if we are selling above the imbalance. And then we are executing over there, okay? It is clear. Now we will keep on looking for examples, okay? For example, here, if you look closely, let's see. Here, for example, price also did the same, created an indecision candle and then did a strong, let me show you. Okay, here price, again, when this candle closes, price has created an imbalance. But if you look for the next candle, you see the wick has mitigated this imbalance, okay? It's essentially the same. It's essentially the same as here, just that here price took much longer. Okay, price here did it almost immediately. Let's go on to the 30-minute time frame. Let's see how this looks. Okay, let me cut it off again right there. Okay, so this was the 4-hour imbalance price has created, indecision candle followed by a heavy bootleg. Then if you go to the lower time frames, you can wait for this imbalance to be filled, okay? And then you can execute your positions after this imbalance is mitigated on the supply zone. It's essentially the same, okay? And then maybe target the low before the imbalance was filled. Okay. There you would get in. And it would at least give you, ideally, the last low, okay? So guys, please answer in the chat. Are you understanding this? So this concept is very important. And it's just, you will see how the market flows with this concept of imbalance and the market optimization. So please, guys, answer in the chat. Is this clear? Very clear. Perfect. Okay, let's keep on looking for more examples. Please help with liquidity again. Okay, we will then go on with the liquidity. Okay, let's look for more examples. Let's have these imbalances very clear. Okay, you see here, as we said, price created an imbalance and then it was mitigated right there. Okay, now let's just keep on hitting the play button. We will see plenty of these examples happen. Okay, again, price has created a large imbalance here. Okay. In this case, as the market structure is not following, okay, the market structure is not following, we wouldn't expect large moves, but most likely the imbalance will get filled. Okay, that's the imbalance. Then you might refine to look for a demand zone. Okay, in this case, the structure is not following, so this wouldn't be a great trade at all. And then what I typically like to do to identify my setups is I will then draw my feed. As you see, the zone I have refined matches perfectly with the Fibonacci, okay, right below the imbalance. Then I will maybe, let's see if it loads. Then the point of control also matches, and you see how the confluences keep on building up, okay? If you're looking at the right stuff, you will see how the confluences keep on building up, okay? As I say, this is not, well, it's New York time, New York opening. Let's see how this trade would play out. Price has left liquidity here during London. Okay, this would be ideally my setup right here happening, okay, with the timing and everything. You see, you identify the imbalance, you refine the demand zone, you throw on your Fibonacci there. Okay, you see if all of the confluences match, you draw the point of control. If the point of control is also on the zone, it's even another confluence. You check the timing, it's New York opening, it's another confluence. But we're missing on a very important confluence, which is a market structure, which, as I say, the market structure is not following, okay? And the point of control is changing, and it's not anymore New York session. So we wouldn't have any trade here, but let's just see how it would play out. So this would be the entry. It would give a sniper entry right there. But as I say, this is Asian session, okay? We are never opening a trade here. So this is not a realistic trade I would be taking. So we are out of this. Although you see, during Asia, you never enter a trade because it's always manipulation. You will get a nice trade, okay, from this zone up to here. You will get a nice trade, but during Asian session, okay, always expect manipulation. Then during London session, always expect Asian session to be liquidity to be taken out, so it's never a good moment to enter. Okay, you see, you could have gotten a very nice trade, but who's entering a trade at this time? Nobody. Okay, you could have got some very nice tips, but I say never enter during Asian session. Okay, this trade would have been great for sure if it would have happened during London session. Okay, sorry, during New York session. But you see how I analyze the chart, right? Have you seen the confluences, how the confluences match each other? Okay, let's keep on looking at imbalances. Sorry, I just went on with the analyzing. Okay. And yeah, let's keep on looking at imbalances. You see how price filled the imbalance? Sometimes it's also good to trade when filling imbalances, okay? You can also find a nice trade when filling an imbalance, okay? Trading the fill of the imbalance. If you see the imbalance we marked out earlier on, it got filled, okay? As I said, the market structure was bearish, so I knew buying was not a good idea, okay? That was for sure. Although we would have gotten there was I think that was our first take profit and maybe our second take profit right here. We would have hit in first take profit and second take profit on this trade, okay? So actually it was a good trade, the buy. But yeah, without the market structure following, it's just too risky, okay? As I said, you can look for a scalp. The scalp was great, but yeah, the timing was not right and the market structure was not following. So yeah, let's keep on looking at imbalances. Right now, price has formed a nice indecision candle. So most likely it will now create an imbalance. Let's see. Okay, it does not create an imbalance. Now it does create imbalance. So here again, now price has broken above structure, okay? Price has created an imbalance here. Okay, now it's starting New York session. Let's see, the imbalance gets filled, okay? You will always see imbalances get filled. And here you would refine, again, you would refine the zone. You would refine the zone. In this case, we would have not gotten any entry. If you see, you can always look for trading as well imbalances, the filling of imbalances. Now let's see how this plays out. Just for curiosity. Okay. As you see, the imbalance gets filled. What time was it? Here we would have gotten a nice scalp opportunity again. But as I say, the market structure is very bearish. Here price did a liquidity grab. Now don't focus too much, okay, on imbalances. Now we will look into liquidity grabs because here price did a perfect liquidity grab. If you look closely here, this was as well during New York session. Price did a perfect liquidity grab. Okay, right here. So this would be more the kind of trade I would be focusing on. Okay, this was the Asia liquidity. And price here, if you look closely, price did a perfect liquidity grab, taking out this liquidity, okay, to the zone basically, and then giving the sell move. This would be more of the trade I would focus on. Plus, we had this imbalance to be filled, and in this case, we would be trading the continuation of the imbalance, okay? So are you understanding this? Is it clear? You see, this would be a very nice setup for me because the imbalance needs to be filled, okay? We have a liquidity grab, price is taking out liquidity, okay? Plus we have an imbalance to be filled to the downside. So this could be a very nice trade from here, from the zone, okay? To main target would be the filling of the imbalance, okay? Which would be this point right here. And if you look closely, as soon as price came to this point, it reversed heavily, okay? Sorry, let me mute everyone. Okay. By the way, these setups, okay, they happen a lot as well in GBP USD, but they also happen loads in gold, okay? I really like to trade more gold because in these setups, you always get at least a 30 pip move, okay? And you don't need more than that, than a 30 pip move as a first take profit, then you secure your entry. And then if price stretches more, then you make loads more money. If not, no problem, okay, break even. And that way you really get profitable, okay? So that's why I always love to trade gold that much, because it always gives that those 30 pip moves from every zone, okay, which is great. And let's keep on looking, okay? Let's see another imbalance. Price has created another imbalance. Okay, right here. Price is also at a demand zone. Okay, in this case, price breaks the demand zone, creates even a larger imbalance. This is why I don't like to trade a lot when filling the imbalances, and I prefer trading liquidity grabs. Oops, sorry. Because it can be hard, or at least for me, at least for my strategy. Wait, where was I? Or at least for me, at least for my strategy, okay, to identify when price will turn around to fill the imbalance, okay? So this is why I prefer to trade the continuation of the trend, looking for liquidity grabs, but always considering imbalances, okay? So let me cut this again. This might sound a bit confusing, okay? It might sound a bit confusing, but as you get more and more practice with imbalances, you will see, you will start to understand them, to identify them, to understand how the market flows with them. Now we will move on to the liquidity grabs, okay? Now we will move on to the liquidity grabs. Don't worry, guys. So here we have this imbalance form. Price broke below this demand zone. So here you expect price to go down, but here again, price created another imbalance. Okay, you look closely. Indecision candle followed by a bootleg creates another imbalance. Here it gets mitigated. Okay, here it gets mitigated, and let's look closely onto this trade. Okay, let's look closely onto this trade on the lower time frames. You see, price has created that imbalance on the 4-hour time frame. Price has created that imbalance on the 4-hour time frame. Price has also, this would be my setup, okay? This would be ideally my setup. This would be exactly the setup I was looking out for today. Okay. So let's look at it. We saw that imbalance being formed on the 4-hour time frame, okay? Then we look for our setup of always price ranges here. With my mouse got stuck, there we go. Okay, price created this range, price created the 4-hour imbalance. Okay, price broke to the downside the range. Wait, my mouse, there we go. Price broke to the downside the range. Then what I would do is trace my Fibonacci from the highest to the lowest point, okay? Then I would also look for the best supply zone. In this case, price respected this supply zone right here. Okay, this is a nice supply zone in the lower time frames, in the 30-minute time frame. The same indecision candle followed by a bootleg creates this imbalance. Price has mitigated it. This would already be a nice entry right here with a stop loss above or whatever. And then price gives the nice sell entry. Okay, this is the, as well, price is taking out the liquidity it left throughout Asia session. Okay, this was the seller's liquidity, this high right here, and this high right here was the Asia liquidity. And this is exactly the setup I was looking out for today. Okay, so consolidation, breakout to the downside. We trace our Fibonacci from the highest point to the lowest point. Price creates a nice supply zone in its way, okay? We trace this supply zone, then we enter at around the supply zone with the Fibonacci. And yeah, we would place our stop loss above. And this would be the exact same setup I was looking out for today, which didn't play out good. But yeah, technically it's that, okay? Let's see. Are you getting me? Remember, all of this will be recorded and it will be stored inside the snipe vault, okay? Now, is it clear with the imbalances, guys? Please, is it clear with the imbalances? Now we will look at some bullish examples of imbalances, okay? Let's see if we find any. Okay, so here price is creating bullish imbalances. If you see, if you look closely, price created one here. Okay, if we just cut this, hold on. If you look closely, price created an imbalance right here. Okay, an imbalance is basically a zone where there's only buyer's pressure or seller's pressure. Okay, just view it like that. Okay, price creates an imbalance here. Price also created an imbalance, bearish imbalance right there. Okay, you see this imbalance from here to here till the wick. Price created this bearish imbalance. Okay, then price created this bullish imbalance. Now you will see how this imbalance gets mitigated. The one price created right here, it gets mitigated. Price rejects this demand zone, okay, and then it mitigates this bearish imbalance, okay. It mitigates this bearish imbalance. Then we see there's loads of imbalances, okay, to be filled, loads of imbalances to be mitigated. So sooner or later, we would expect for price to mitigate all of these imbalances. Okay, you have to also you see follow the market structure. Okay, look at many time frames to understand when it's most likely for price to fill these imbalances or to keep on a trend. Okay, so now it would be a good idea to look for buys. For example, I would go into the lower time frames. And then just look for potential setups, okay? Now price hasn't broken above this structure, hasn't broken structure. Let's see if it breaks above. Okay, price rejects perfectly to the imbalance. Let's see if we trace our feet. If we see something more clear. Here we have a nice zone. Let's see if price reacts to it. No, it went directly to the upside. What time was it? London session, now it's New York session. Now price is taking out this liquidity. And then just price flies and fills all of the imbalances. Yeah, but just look at how price reacts to the zone. Just look at the reaction of price to the zone. Let's see if we could spot a nice entry. Here, now the structure has obviously been broken. Price has ranged here. It has broken as well to the upside. Then we would refine for buy opportunities around this Fibonacci area, okay? Maybe this would be a nice zone. Price would be taking out loads of liquidity. Let's see. Price ever comes to the zone. I love trading gold because it will really spike and it will really go hard. Okay. Now the problem is I'm focusing on too big of a time frame. Okay, I should be focusing on lower time frames to spot more entries. But yeah, just look here. We would have a perfect entry from this supply zone. We could have got a scalp. Okay, for sure. It also takes the Fibonacci, the 0.61 of Fibonacci. Okay, it's following the market structure. It's New York opening. This would be a nice entry. Okay, it's taking out all of the Asian liquidity. And now price will most likely take out all of the buyers' liquidity. And now it's the closing. Now, right here, when it's the closing of New York session, guys, you have to close. Okay, here at 8, this would be the closing time. Okay, because at this time, expect for people for the institutions, New York institutions, to start mitigating themselves. Okay, if they sold there, they will start buying right here. Okay, taking profits. Okay, and then during the Asian session, it will most likely take out all of the New York liquidity to trick out all of the retail investors. Okay, this is exactly the same that happens with London, but you see, it will then take out all of the New York liquidity. And now price, you see, price gave now a very nice rejection to the 0.64 of Fibonacci plus the supply zone. And sooner or later, you will see price will take out all of this liquidity. There we go. Now price took out all of the liquidity, and this would be a liquidity grab. Okay, let me show you now the example. This would be again a perfect setup for us. Okay, perfect setup for us. If we look closely, it's getting a bit messy because I'm just trying to force examples. Okay, I'm just trying to force examples, and the examples happen daily when looking at all of the time frames. Okay, but here we would have again a perfect setup. If we look closely as well, New York opening, price is in a bearish trend, price created, you see, price created, oh, sorry, this range right here, okay. Well, let's put it until there. Price created this range right here, okay. Price broke it to the downside. Price created a supply zone. This is the setups I'm looking out for daily, okay? This is what I'm sending you guys daily, okay? Oops, what happened now? Wait, I'm not sure what's up now. Okay, there we go. As you see, the same. Price creates a range, it breaks to the downside the range. Then you want to trace your Fibonacci from the highest point to the lowest point, which is this one right here. Okay, price has left. This was yesterday's New York. This was Asia liquidity. Okay, New York and Asia liquidity. It's this one right here. Okay, well, both of them, sorry. This was yesterday's setup. Yesterday's the 60 pip liquidity grab was very similar to this, okay? So as you saw yesterday, I marked out on my chart. So there was one, which was NY liquidity. And in this case, this is Asia liquidity. This was the same setup as yesterday's liquidity grab, the one that gave us 60 pips, just that then the news came out and they just took price on the complete opposite direction. But thankfully, we took two take profits. And yeah, for example, this would be the setup, okay? This setup happens on almost every time frame. I like to focus it on the lower time frames to look for more scalper entries, okay, with tighter stop losses. But essentially, the entry here would be sell at the 0.76 of Fibonacci. Okay, stop loss should be above the last, above the highest point, okay? And the main take profit should be the last low, okay? This trade will always give you a 1 to 3 risk to reward ratio, okay? You're entering at the 25%, okay? You're risking 25 to win 75, okay? If this was 100% all of this impulse, okay, you are risking 25% to win 75%, which means this setup will always give you, if it gets completed 100%, it will always give you a 1 to 3 risk to reward ratio. What do I always do? I take the first profit when the risk to reward is 1 to 1, second take profit when the risk to reward is 1 to 2. This is the main take profit for me. And then the third, this is the main take profit for me because usually this point right here matches with, you see the point 76, okay, to the upside, okay? And sometimes price will react to the point 76 and then go to the upside. So this is always my main take profit, okay? Well, all of them are main take profits, but usually here is where I would close most of my position, okay? Then I will leave some running. Oops, sorry, I don't want to delete this. I will leave some running for the 1 to 3 for the main take profit, which is the last low. Here I will close absolutely everything, okay, or a 95%, and I might leave a 5% running in case price, if it's gold, goes for a 200 pip move or a 300 pip move, okay? So this is how I plan my trades out. Okay, this is the setup. This is the liquidity graph setup we were looking out for yesterday. Okay, let's delete everything here. Let's delete everything here and let's focus, like, okay, on this setup, okay, because this is a perfect setup for me. Okay, let me go right here. This is a perfect setup for us, okay, guys? Let's focus on this because this is a perfect setup for us. Okay, overall, market structure is bearish, okay? Market structure is bearish, okay? Sorry, guys, some of you are messaging me and I'm just trying to read the messages. Okay, let's focus on this setup because this is our strategy. Overall market structure is bearish, okay? So we're going to be focusing only on sells. I'm looking at GU. Okay, yeah, let's look at an example on gold. I'm not sure why I was looking at GU. Let's look at an example on gold. Oh, this is gold euro. Hold on. Okay, price, just a very fast hincapié. Look at here, what this is a very, very old chart of mine. Here I marked out this Fibonacci. It gave me the exact highest point for 1,000 pip trade, more than 1,000 pip trade. But yeah, okay, now let's look at the setups on gold, okay? But first of all, let's have a very fast look at what gold is doing. So basically, price is doing a double bottom on a demand zone, on a 4-hour demand zone. Price is doing a very nice double bottom. Like always, it's too clear for me about double bottom. I would always expect for price to have a dip, okay, have a liquidity grab before going to the upside, okay, before giving the pleasure to all of the retail traders. It will do everything it can in order to not give the pleasure, okay? That's my view. So this is basically what price is doing. It wouldn't surprise me at all, okay, to have a liquidity grab deeper than this zone. I think it was in 2 hours. To this lower area right here, 1785. Again, it's the zone I've been focusing on. It's the zone I believe price will reach sooner or later, 1785. Okay, so I believe at some point price will, like always, trick out everyone, take out this liquidity. Again, this is yesterday's New York liquidity right here. Oh, sorry guys, I just can't move it. There we go. and this is at the moment London's liquidity. The chances of price taking out this liquidity and giving a nice move, okay, are high. Okay, so basically this is a bit what I'm looking at for gold currently. Okay, I wanted to ride the wave. As I said, let's have a look at gold. As I said, the way price came down, okay, the way price came down, it was filling all of the imbalances. Okay, if we look closely on the 30-minute time frame, price was filling all of the imbalances. Here, price on this candle, the reason I like this setup, okay, let's have a look at this bearish move. Okay, price was creating imbalances and mitigating them. Okay, this one is mitigated. Boom, here it created another imbalance right there, and it has already been mitigated. Okay, let's see, price is up, it's just mitigating absolutely everything. Okay, again, price has created an imbalance here, it has mitigated it. All right, okay, price again creates another imbalance, mitigates it on this candle. Okay, so there was no imbalance to the upside to be filled. Okay, there was no imbalance to the upside to be filled, except for this one right here, except for this one right here. Okay, so my idea basically was to, as we also saw, this is the same setup we looked at GU before. Okay, price created this range right here, price created an imbalance. Okay, price didn't fill this imbalance, then we also draw our point of control. Sorry, our point of control, our Fibonacci. There was this zone right here. I didn't want to miss a setup, so I entered a bit lower on the zone, hoping for price to fill the imbalance and then just keep on riding as it's been doing right here, okay, all the time. Look, if we look closely, let's see here, it's very fast. See, price here created a range. Okay, then price went to the downside. It created this imbalance. If we would have traced our Fibonacci right here, you see, we would have gotten a nice entry here. You see, this was New York time, okay? This was New York session, and look at during New York session, the respect. This is why we all have to focus on only trading during New York session, which is where the money is at, okay? As you see, this was 3:30, New York opening, okay? Well, few hours into New York opening, and look at the rejection it did, okay? Consolidation, break to the downside, price fills the imbalance, goes to the Fibonacci. For sure, we could have refined a supply zone, okay, here, for sure. You see this 5-minute supply zone right there. 5-minute supply zone right there. And let's see the point of control. If we had a point of control by any chance. Oh, there's no volume in this chart. Okay, so you see here we could have gotten a very nice sell. We caught the buy from here to here, but then the news just took off price from this sell area. Okay, but you see how the setup works, right? How you can flow with this setup through the market. Okay, so my idea this morning was essentially the same, to do the same. Price range, okay, broke to the downside. Then we were looking for entries at the Fibonacci. Wait, where did I go now? Then we were looking for sales, okay. I'm gonna just cut it there. We're looking for sales at this area. Plus, price also created liquidity here from Asia session, okay? So it didn't look bad, the fact that price would take out this liquidity, look to complete the setup, and then just ride the setup, okay? As we do daily, okay? And basically, this is what I was looking out for today. As you saw, here price did it perfectly yesterday. if you look closely, you will see how price completes this setup frequently, okay, very frequently. And yeah, if you combine it with liquidity, etc., you will see how it gets respected many, many times, okay? In this case, it did not get respected. As always, you can't be right 100% of the times, but here we might have, maybe we could have grabbed some nice entry here, okay, on this first area on the 0.61. Okay, we could have caught maybe a 30 pip, 40 pip, I'm not sure how. Okay, it moved quite a bit, okay, from 1700, 35 pip, you could have grabbed a 35 pip trade, okay, here, yes, but then just price broke above, okay. Now, currently, now I'm just reading I'm reading the messages. We're looking for a good continuation to the downside. Right now, okay, price has broken structure. Let's go to the moment we are at right now. Okay, right now, price has broken structure. Let's see to what extent it has broken structure. Okay, price has broken structure right now. So today during New York session, we could see some scalping opportunities. Okay, if we trim our feed, so price has, let me delete all of this then. Okay, price has here, it has created a range. It has created a range right here. Okay, ideally, I would expect for price to do a liquidity grab down to this area, okay? That would be ideally, that would be the ideal setup, okay? But it would not surprise me at all, okay? Another viable setup, completely viable setup during New York session, okay? When there's volume in the market, bear in mind, things will happen most, like the chances of things happen are much higher, okay? When there's volume. So maybe during New York session, we could see, okay, let's see the point of control. There's no point of control on this chart. See, price created this range, broke to the upside. We can trace our feed. We can refine for demand zones, for potential entry zones. Okay, this is one. Although it has been tested here, I like this demand zone because it takes out all of the liquidity. Okay, it takes out this liquidity. Okay, this is the range that has broken above. Okay, it takes out several liquidity, buyers liquidity, price has created on its way up. Okay, this is buyers liquidity, buyers liquidity, buyers liquidity. Bear in mind, many buyers are placing their stop losses below this zone, okay, below this highs or lows. So all of this is liquidity they are creating, okay, for institutions to take it out. So we could be expecting, okay, a move that we could see is price after this break right here, this change of character, we could call after this change of character, we could see price rejecting this demand zone, okay, and then flying a bit to the upside, not much, okay, not much, okay, but yeah, this could be possible to see some bullish moves from around this area as well, okay, so we could have this as a first buy, and this could be the zone below could be our counter buy in case price doesn't respect this zone, okay? This could be a nice entry in case price wants to respect the 4-hour double bottom is creating here on the demand zone, okay? On the 4-hour demand zone, price is creating a very nice double bottom, okay? But if there's a nice volume in the market, we could see some very nice moves from this zone right here. We could see some very nice moves to the upside from this zone if there's volume in the market, okay? If not, we could see some nice moves, okay? Then for New York closing, price could take out all of the New York and all of the London liquidity, okay? Take it out to the downside. Then during tomorrow, London price could take out all of the Asia liquidity it has left around here. And then we could see the liquidity graph, okay? We could see liquidity graph. The problem is I do not see where, unless it's because all of the imbalances have been mitigated. That's the thing. I do not see where price could target, okay? Unless it was or much higher, okay, until this area right here, until the, let's see, let me mark this out. Until the 1730s, which is pretty crazy, okay? Well, it's 250 pips. It's not that crazy at all, actually. Okay, that could be because I do not see imbalances until there, and price has to get optimized. Okay, it will fill imbalances sooner or later. Here, it has also left loads of liquidity. If you look closely, it has left loads of liquidity plus this imbalance. So sooner or later, price will come to the 1730 zone. Okay, it has to optimize itself. Okay, it has to mitigate. And yeah, if not, if it's not going up to that zone, it's going at least down to this area, okay? And whenever price comes to this area, we will most likely see a strong move, at least a 30 pip move or whatever. The same, I believe, from the 1695 area. I would also expect for price to have at least a 30 pip move, okay, from around this area, okay? So more or less, guys, this is it for today. I'm not sure if you have any questions. Ask any questions you have in the chat, and I will be answering them. So yeah, feel free to ask any questions now you have some time. Is there a possible reaction? What do you mean? The gold will fly to the 1730 zone, or we're melting during New York? In my opinion, it's one or the other, okay? Bear in mind, guys, we're not trying to, me personally, I'm not trying to predict where price is going, okay? I'm trying to predict those zones where price will have the strongest price action and where I will be able to find a nice scalping opportunity. And if we can stretch it, then even better, okay? But I'm focusing on those zones, okay, where price will react. I'm not trying to predict where price is going by today, tomorrow, the end of the month, or whatever. I'm trying to identify those high volume zones, those high probability setups where I know price will have strong reaction. It will take loads of practice. Yes, guys, it takes loads of practice, but you will see it. You will start to understand it. It will become easy. Just get used to these concepts, okay? Whenever you look at the chart, bear in mind all of the concepts I'm sharing here, because these are the essential concepts to day trade, to scalp, okay, nowadays. I'm telling you, these are the essential concepts and the concepts you must have to be good at trading. Any professional trader, day trader, will know these concepts, okay, for sure. Few won't, okay, unless you have another strategy, but most of price action traders will be really familiar with these concepts because they are the concepts, the key concepts, okay? I am a bit confused on what point of control means. Basically, the point of control is the where most of the orders are located, okay? So it's, look, the point of control is also matching the zone we were marking out before. You see on the other chart, this is the point of control. Now we will get into it, okay? It's also showing the point of control close to the demand zone we were marking out, which this is an extra confluence, like always. Price is now reaching this supply zone. Let's see how it reacts. And yeah, let's have a look at the point of control very fast, okay? I won't get too technical into it, but basically the point of control maps the amount of volume, the amount of orders, sell limit orders, buy limit orders, etc., that there are on every zone, okay? On every certain price, okay? For example, on this from the 1723 price to the 1722 price, okay, every 10 pips, there was this amount of volume, okay? At the end of the day, I have it as symbolic, okay? I do not have the values, okay? You can add the values to see the actual volume there is on every chart, the actual digits of the volume there is on every price, okay? But me, I don't need it. I just need the point of control, okay? The point of control is basically where most of these orders, where most of this volume is located during the session, okay? During today's session, as you can see, most of the volume right now is here, okay? Which is the zone. Most of the limit orders, the buy orders are right here, okay? Which is the zone we were marking out before as a potential buy zone, okay? This means the big boys, the people that can move, well, where the real volume is at this zone, okay? And like always, I like to add the point of control as an extra confluence, okay? Usually when you have all of these confluences, you will always get a 30 pip move from the zone, okay? 90% of the times you will get at least a 30 pip move from the zone, okay? It's essentially the same, okay? Okay, now I will show you how to put the point of control. Basically, this is where most of the volume is located. Me, what I like to do is do my whole analysis, and then at the end, add the point of control, okay? Just to see if my analysis is matching with what the market is saying, okay? With what the volume, with where the volume is, okay? So guys, is all of this clear? Now I will show you how to add the point of control. But are you understanding everything, guys? I think it's pretty straightforward. Don't worry, because the lessons will be recorded and you will have access to it, okay, on the snipe out, and you will be able to, yeah, just go over it and look at the imbalances, okay? So how to add this indicator right here, SBP. I've shown you multiple times on the group, but then now let's have a look. I'm not sure why I have all of this. So guys, you just want to go onto TradingView and search for SBP, which is the session volume profile, and add it, okay? And you will have this thing added. Then you can modify your colors or whatever, but the configuration I use is the one that comes already set, okay? That's the settings I have, okay? I just changed a bit the color, I took away the background, and that's it, okay? That's all the settings I have for my point of control. And yeah, let's see. Let's also have a look at Fibonacci, okay? Because it's very important. I will now screenshot the settings. Well, no, actually they are already screenshot, okay? This is the Fibonacci. These are the settings. If you want to, you can screenshot them, okay? I only use these levels, the 0.618 and the 0.764, okay? These are the only two levels I use, well, and the 1 and the 0, okay, the 0% and the 100%. And yeah, these are the colors. If anyone wants to know the color, it's exactly this color. Just so you make sure, if you want to look at the graphs like I do, just make sure you use the same tools as I do. And yeah. And the point of control is basically this tool. Okay, these are the inputs. These are the settings that come with it, okay, once you add it. So don't worry. By the way, I think you have to be a premium or something like that to have this indicator. So I'm not sure about that. I am premium, so I do have it. I'm not sure, guys, but some of you have told me that. And yeah, basically, I think this is it for today, guys. Do you have any other question? Do you have any other question? Feel free to ask. And no questions. If there's no questions, let's see. Hey, Christina, what's up? At the moment, there's no new sell zone, okay, guys? Let's step aside from the market until New York opening, okay? Trust me, let's do that. Let's be smart and just wait for a New York session now. But yeah, price is just creating a very nice liquidity pool below, guys. Yes, I will send analysis. I will send analysis right now, okay, guys? As soon as I end the live, I will be sending the new setup, okay? Thank you so much, Ali. This is the main demand zone. Right now, I will draw the setup completely. Well, let me in fact do it right now live with all of you. Let me delete everything and let's mark out the important, which is this 4-hour demand zone. And this 2-hour demand zone inside the 4-hour demand zone. Let's mark out all of this liquidity. Okay, mark out all of this liquidity. And this is the liquidity I think price will take, okay, sooner or later. Both of these lows, okay. I think this is a clear trap. And then for today's New York session, given the current market structure, etc., we could see nice moves, okay, as we were looking. Go into the 15-minute chart, we can see a change of character right here. Okay, this will be a trade for today's session, not scalping at all, because I believe price can take out the liquidity. And then we want to trace our feed till the highest point price goes. I hope it doesn't go much higher. Then we have this main demand zone right here, okay, which is the closest one to the 0.76 zone. And it's the one that You see, I hate it doesn't let me move it. Let me make it bigger. Hold on. And as you see, for price, once price comes to this zone, if price comes to this zone, it will have taken out all of the liquidity of all of the buyers, okay, that have been buying all the way up, okay? Plus then we add the point of control, which we see today's session point of control at the moment is as well matching perfectly the 0.76 of Fibonacci, matching it perfectly to the exact fit. So let's see, these are just extra confluences, okay? So today we could see a nice buy opportunity from this area. Okay, pretty simple, pretty straightforward. And yeah, but overall, I think price will take out the liquidity to the downside to trick out all of the retail traders, okay? All of the early buyers, and yeah, just grab all of that liquidity. You mean this imbalance right here below? You mean this one right here? So KB, you mean this imbalance below? Or this one right here? Okay, here we also have, here if we go into the 2-hour time frame, we also have sort of an imbalance. I'm not sure if it ever got mitigated. Yes, all of them got mitigated. But this is also a nice zone right here. Let's see. I am not going to be trading any sell, okay, at the moment. This is also a nice supply zone, which matches perfectly with the point of control. It has already been mitigated, and something I also don't like is there's still this liquidity here above, and this liquidity here above, which price could take it out, okay, at any moment. So yeah, I wouldn't be selling there, although we have a couple confluences. Fibonacci, the 0.61 of Fibonacci as well on the zone, but the market structure is not following, so not for me. And yeah, the one below, I reckon it will feel it, okay? Or if not, it won't. This will be one, just think about this. 1 in every 10 times, the market allows retail traders to win, okay? Those times are when we lose and when retail traders win, basically, okay? Most of the times when price creates such a clear double top like this one right here, price will manipulate, okay, and it will grab the liquidity below. 9 out of every 10 times. But 1 every 10 times, price will do a clear setup, okay? And that time is when retail traders win, basically. Okay. Let's see Bitcoin. See Bitcoin now. Wow. Wow. Didn't look at Bitcoin for a while now. Wow, look at what a nice. This was such a clear of a breakout. This also, you must also bear this in mind. Whenever price creates such a clear resistance, okay, or the same we were talking about. Yeah, exactly. This is a great example. Yeah, great example. Exactly. Well done. Let me take this out. You see, this is pretty similar to what gold is doing right now, okay? Where is the replay thing? There we go. Okay, gold is right now creating a double top, very clear double top, like the one Bitcoin created right here. Sorry, a double bottom. Okay, like the one Bitcoin created here. For sure it's on a demand zone or whatever. Oh, Bitcoin will tank, okay? Well, now it will have taken out all of this liquidity. Okay, price created this double top. For sure, many crypto enthusiasts started buying like crazy on this double top. plus break of structure, plus blah, 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 blah. Then look, pretty much the setup we're looking at for today, okay, it's pretty much the same. If we go into the 30-minute time frame here, you see price broke above a structure, which is the change of character I'm pointing out right now. Okay, this is now, remember gold's example, okay? Remember gold's example of the setup I'm looking at for right now of buy. Okay, look at this setup and then look at Bitcoin. Oh, where is it? Where is the replay? Okay, where is this? There we go, okay? So this is more or less what we're looking at for gold today. Price has created this double top. Sorry, this double floor, this double bottom, however you want to call it. Okay, then price breaks above structure. This could be the change of character. Let's just analyze exactly the same way we have done with gold, okay? This would be the change of character. Okay, then we want to trace our Fibonacci. Okay, then we see, let's go into the smaller time frames. We see this could be the most clear demand zone, or this one below, okay, one or the other. But this one is, if you see, price created an indecision candle, then shoot up. Okay, price created pretty similar setup. Let's see the point of control. Okay, the point of control in this case is up here. So let me, in this case, we wouldn't take it into consideration, but the change of character, the double floor on the 4-hour demand zone, etc. Then we would be looking for potential buys at around this area, okay? This is exactly what we're looking at right now for gold, okay? If you screenshot in your mind this example, okay? You screenshot in your mind this example, and then we flip onto gold. In this case, price didn't come to the demand zone, but gold typically comes to the demand zone, okay? If you screenshot that example, and then we look at gold, it's basically the same, and we are expecting for price, which is basically to do the same thing, okay? This double floor, the change of character, now price comes down to the demand zone, and then we have some nice move to the upside. But as I say, I'm not focusing on stretching it too much at all, because I believe this double floor is a trap, like the one Bitcoin did here, okay? Created this double floor, but at the end, all of this, Bitcoin was just creating buyers liquidity like crazy. And look at it tonight or yesterday afternoon. It just took out all of that liquidity, okay? This is pretty similar to what I see happening on gold, okay? So is it clear, guys? But yeah, this is exactly, I think this is exactly what gold is doing. Just creating buyer's liquidity, very clear buyer's liquidity, to then take it all out of a sudden candle, okay? So is it clear, guys? Now we are way over the hour of the class, I think, not sure. So I think we will be ending it now, guys. If you have any question whatsoever, feel free to ask, okay? If not, ask me through private chat, okay? Whatever, through Telegram, and I will be answering them. Remember, this lesson will be recorded and it will be stored inside the Snack Vault right now. Yes. So yeah, guys, make sure you go over it and you try to understand as much as you can, okay, all of the concepts I've shared with you guys. Okay, thanks to you for joining, guys. I hope you all have a great day, and I will be sending out the setup we've just analyzed for gold on the pro group, okay? But we have to wait. Well, I will wait. I will wait for price to create a high. Once price creates a high, then I will trace the Fibonacci, and then I will send out the setup, okay? And yeah, guys, by the way, I'm going tomorrow on a trip to the Canary Islands. I will work as much as I can with my iPad, okay, and sending you. What I won't be doing is lives, basically. I will try to work like normally, but I won't be doing lives, okay? And I will be updating you. I will be updating you with everything I do over there. I will be sharing you whatever, wherever I go, whatever activities I do, and more. Okay. So let me answer very fast the last question. What does the Fibonacci indicate, bro? So the Fibonacci is basically for every impulse the market does. Okay, let me. So the market moves in impulses, okay? So, oh no, not this. So this is a bearish impulse. This is a bullish impulse or a retracement. This is a, let's say this is a bearish impulse, a bullish retracement, okay? And so on, okay? Let me, so basically each one of these impulses, okay? This length is a 100%, okay? Of the impulse. This length is a 100%.
Poet.
I'm sorry, let me silence, let me mute everyone. Hold on. Okay, guys. So this impulse is at 100%, let's say, okay? From 1730, which is the price, you can check on the right-hand side, 1730 to the 1800s, okay? This is a 100%, this is a 100%, okay? So the Fibonacci basically breaks this 100% down, okay? It breaks this impulse down into whatever percentage you want, okay? So this is 100%. Well, this should be 0 actually. No, yeah, this is 1, sorry, which would be 100%, okay? If you divide it by 100, if we have it in decimals, this is 1 and this is 0%, okay, of the impulse. And then you can just add levels, okay? If I want to always know the 50% of the impulses, if I want to know where is the 50% of every impulse, then I will add, for example, the 50% level, okay? I know that this point right here is the 50% of every impulse, okay? So again, price here creates a bullish impulse or a bullish retracement. So I want to know where the 50% is, where the 61% is, and where the 76% is of this impulse, okay? And the Fibonacci tells me this. Why is it a good tool? Because whenever price falls or goes up, when it creates an imbalance, it usually mitigates, okay? If it falls hard, it will mitigate, for example, the imbalance, okay? When using the Fibonacci, okay, it will tell you high prices in the impulse. If you use these levels, which I like, which are the only levels I use, okay, it will tell you some levels, okay, which are high in the percentage, okay? For if price comes to these levels, it means it has mitigated a 60%, a 61% of the impulse, okay? So this means these are already interesting areas for us to place our entries, okay? Because when price comes to these areas, it means it has already mitigated a 60% at least of the impulse, okay? These areas will be the freshest. From this area upwards, you will find the freshest zones because it will have already mitigated most of the impulse, okay? If it has created an imbalance, for example. Let's see if we find a clear example. For example, here, we have this bullish impulse, okay? Sorry, I drew my Fibonacci too fast. We have this bullish impulse, okay? This is a 100%, okay? This is a 100% from this price to this price. It's a 100% of the impulse, okay? Then the same, let me show you. Then again here, from here to here, this is 100% of the impulse. At the end of the day, it's up to you how you trace the Fibonacci, but I have my specific way You will find videos on the snipe out about it. Okay, I don't want to get into it because then I will be hours here, but you will find videos in the snipe out. So basically, this is a 100% of the impulse. Okay, we are in a bullish trend. This is a 100% of the impulse. So we trace our Fibonacci from the bottom to the top. Okay, we trace our Fibonacci from the bottom to the top. Okay, and we know from this level downwards, okay, if price comes to this level, it has mitigated 60% of the impulse, okay? Price tends to mitigate, so price tends to mitigate impulses. If price goes up suddenly, it will go back to mitigate it, okay? And from this level onwards, this is already a good place to start looking for buys, okay, for this mitigation. So if we go into the candles, sorry guys, they are calling me and I'm just a bit distracted with everything that's going on my phone. So yeah, this is the 61%, the 76% of this impulse, okay? So these are the areas where you want to start looking for supply and demand zones, okay? Here, for example, we have a demand zone at the 61% of the impulse, which, yeah, the demand zone, which matches with Fibonacci, etc. So yeah, look, this would be a perfect setup. You see, this would be a perfect setup. Sniper entry to the 76 point, which is the zone I always focus on. Entering on this point, plus price never closed below the demand zone. And basically, yeah, perfect setup. Okay. And then you could look for price to mitigate these sells right here, okay? Bear in mind, when we are entering here, this would already be over 130 pip trade, okay? So we would already be taking profits, okay? Just check this out. This is the same setup as always. Consolidation, price breaks above the consolidation. We trace our Fibonacci. We look for the freshest demand zones, okay, on this from the 0.61 onwards, okay, at least 0.61 onwards, okay, because price has to have mitigated, okay, all of the 60%, okay, at least. And then we will be looking. Here we would have a sniper entry. This is the setup I'm always focusing on. Okay, here we would have already taken profits and we would leave some remaining to see if price comes up to mitigate. Okay, in this case, you see price has already mitigated this huge imbalance. And here we would have grabbed a very nice 200 pip trade, okay? So be patient, guys, because I catch these trades. They will come, okay? This is the setups I'm just sending out to you all the day. Bear in mind, they don't get met 100% of the times, but sometimes they really get met, okay? And we get these sniper entries. So this is how I use my Fibonacci. And yeah, it will be a perfect example. Then price has mitigated. Again, price has mitigated this sell zone. Price has broken. Price has created a range right here on this supply zone. Price has broken it to the downside. You trace again your Fibonacci. You add your most clear supply zone. Okay, right there. You add this clear supply zone. Okay, it broke to the downside. Created this supply zone. You add the Fibonacci, the supply zone. Let's say we had the point of control this day. Now the point of control was down. But yeah, again, the same setup, essentially the same setup. Okay, by this time we have already taken profits. Okay, this is the 1-to-1 risk to reward, 1-to-2 risk to reward, and the main take profit or the last take profit 1-to-3 risk to reward. Then we would have grabbed the last take profit and then price shoots to the upside. But you see, we have grabbed a very nice trade over here. And if we were still holding the buy from here, we were still holding some of this buy right here, we would be even flying more. Price as well. Here we were entering, okay, London opening, good time to enter. Good time to enter, okay, the setup, this is again, the same we were looking at for today, exactly the same we were looking out for today, exactly the same timing, the same everything. But then bear in mind, price has to take out the Asia liquidity. This is basically the same setup I was looking out for today. You see, this liquidity was taking out with the setup. Here you get at least a 1-to-1, a 1-to-2 risk to reward ratio. So this was the one we were looking out for today, which price didn't give it. And here it happened the same that happened to us today. Price then took out the liquidity. Price always takes out the liquidity that price forms when it's 1 a.m. in Spain. Price tends to take out the liquidity. So it's what it did again, and it's what it did today. And yeah, again, here, let's see. Another range. Okay, broken to the upside. Then you trace your Fibonacci, look for your demand zone, etc., 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 and just keep on flowing that way with the market, okay? See here, we would have grabbed, again, a very nice sniper entry at around this area, okay? The 0.76 of Fibonacci, consolidates, breaks to the upside. We look for a trade here, okay? We look for a trade here that looks something like this, okay? The first take profit is at 1-to-1, okay? First take profit taken. Second take profit is at 1-to-2, more or less, or at 50 pips, okay? Let's see if we would have had a second take profit. There I would have taken more profits, okay? As soon as price takes out this liquidity, you take out more profits, okay? Let's see. Why doesn't it say the risk reward? Okay, more or less at 50 pips, you will be taking more profits, okay? We entered at 87. At 92, we will be taking more profits, okay? More or less. And let's see if price would give us the final, you see, boom, this would be, and the last take profit would be on this area right here, okay? And then you can always leave some remaining in case price wants to stretch, okay, much more. Yeah, price will go up. This is why, guys, but just now listen to this closely, okay? Listen, focus on the risk management, okay, I'm about to show you right now, okay, for our strategy, because it's the most important thing, okay? You have to understand this to average up, okay? This is the range, okay? Okay, this is the range and this is the breakout, okay? Bear in mind, guys, the market will do anything, okay, at any time. The market is crazy. The market will do anything at any time. Find your zones and follow your plan with your risk management, okay? Bear in mind, look at this, okay? So price, range breaks to the downside, okay? Perfect. We trace our Fibonacci, okay? We trace our supply zone, boom. Okay, we know this is a nice sell zone. Stop loss above. We're entering at the 0.71 zone, 76, sorry. Okay, and then as soon as price comes to this zone, as soon as we get our trade executed, which is right there, okay, boom. At this point, we have already taken our first take profit, which is at 1-to-1. Okay, this will be our first take profit. So first take profit hidden. Then at 1-to-2, more or less, would be our second take profit, which would be right here. So in this case, we have already hidden 2 take profits and our main take profit, okay, which is the second take profit, always our main take profit. And then when price comes here, you have already obviously secured your entry, you have taken 2 take profits, and then you just let it run, okay? Then in this case, maybe you take more profits here if you put your your take profit right there, which would be the 1, 2, 3 risk to reward. But in this case, you see, you don't get it. You get stopped out here at break even, but you have already taken 2 take profits, okay? So it's a completely profitable trade. Then, again, the same. Price forms this range right here. Okay, you have to focus on the risk management I'm showing you right now because it's the most important thing, okay? Price forms this range. Again, trace your feet from the lowest to the highest point. Then, boom. Trace your demand zone. Okay. Then trace your buys. Me, I always enter at this price, more or less. I always try to place my trade maybe few pips higher than the 0.76. Then again, it's the same. Wait for price to come to the zone. This is the 1, 2, 3 risk reward. This is the complete setup, okay? But bear in mind our main take profit is here, okay, at 1 to 2. This is our main take profit. This is our complete setup, okay? And this is our first take profit, okay, at 1 to 1. So yeah, wait for price to come to the zone. Okay, in this case, wait, price is forming new highs. So hold on. So there, I will try to enter there. Stop loss below the zone, targeting the last high before the range and the break to the upside. And then just wait for price to come into the zone. Okay, there we get tapped in. We enter right there. Okay, then as soon as we have a 1-to-1 risk to reward ratio, which maybe this has already been met. Okay, right here, this is our first take profit. Okay, first take profit. Then second take profit at 1 to 2 risk to reward. When price has come here, we have already secured our entry. Okay, with a win rate above 50%, it's impossible to lose if you follow this strategy, and this strategy gives a win rate way higher than 50%. It's impossible that you lose. Okay, it's impossible that you lose. Okay, then at 1 to 2, you want to take the next profit, which is more or less, yeah, somewhere here, okay? Here it tapped, you maybe took profits, maybe didn't, depending. And the last take profit is always the 100% of the impulse. And then you might leave a 5% or so remaining just running. When price comes to the last take profit, okay, you might leave a 5% running. So sometimes gold, let's see what it did later on. Okay, you see in this case, the last take profit was perfect, then price just reverted, okay? What do you mean? This is a way different strategy because in the way down, it's still the imbalances. What do you mean? Yeah, I will focus more on the imbalances, okay, on the larger time frames, okay? Right here, well, all of these imbalances have been mitigated. All of these imbalances have been mitigated, okay, to the downside. Maybe this imbalance remaining wasn't mitigated, okay? This one right here, from here to here. So yeah, we just caught the feeling of that imbalance perfectly. So please tell me what imbalances were you looking at for? Here was exactly the same. Here on the setup, which happened right here on the lower, on the, sorry. My mouse just freezes every once in a while. I don't know why. So here it's essentially the same. Okay. Remember, we are looking at trades. We are focusing at trades on a given session. Okay. We are focusing on a given session, not on a swing Okay, we are worrying about the near imbalances, okay? The ones that we think are relevant for the given session. Let's look again at this example. Okay, again, the break, consolidation break price. Price has formed this wonderful imbalance here. So we expect for price to fill this imbalance. So we expect for price to come to our entry zone, okay? This is the imbalance price has formed. We expect for price to come to our entry zone. Okay, this is the demand zone. Sorry, the supply zone price has also formed, okay, before the imbalance, indecision, followed by bootleg, nice imbalance to be filled, okay, a nice place to expect some reaction of price. And yeah, essentially the same setup as always. You would target the low. Okay, so hold on. This would be the main target. And again, price fills the imbalance right there. Fills the imbalance right there. Remember, we are taking profits at 1-to-1 risk to reward, which is there. We are taking profits at 1-to-2 risk to reward, which is there. Well, there exactly. And the last take profit is at 1-to-3, okay? And in this case, price taps our second take profit. Okay, price taps our second take profit, and then it just spikes right back up. But at this point, we already have obviously our trade secured, so we do not care. Okay, price spikes back up. Yes, guys, I have already done the current chart analysis. I have things to do, sorry, so I will be sending it right now. We've gone way over the hour of the class. And I also don't want to make the recordings too long because then they are very boring to go over. And yeah, this is the current setup, okay? We could be looking at for today. I will be sending it right now to the pro group, okay, guys? See the point of control still there? So yeah, I will be sending right now the setup and the buy limits, okay? No, guys, you will find this setup happens on any time frame, okay? I really like to look at these range consolidations to break on the 30-minute and 15-minute time frame. But before looking at this, I have a look at the higher time frames, okay, to make sure the market structure will follow, etc. Okay. So as I said, I will be sending out the analysis right now and the buy limits. Okay. Have a great day, guys. I will see you all this afternoon's live. Let's go. One more question. Okay, make it fast, please. One more question. I'm waiting. I will set break even immediately after our 1-to-1 ratio has been met. Yes, this I also want, guys, that it depends up to you and to your risk management. Okay, me, I sometimes do, I sometimes I don't. Okay, if I come from a very long winning streak, I might hold my original stop loss until take profit too. Okay, if it's been that I missed a trade before or whatever, I will try to be as safe as I can with the trade, and I will try to trim off profits as soon as I can and just secure the entry as soon as I can. This just depends on your situation. So in terms of moving your stop loss to break even, I will always tell you whenever I'm doing it, but I also want it to be up to you and to your situation, okay? Because I don't know about your account balances. I don't know anything about you. And I don't know if you've done more trades that day or whatever. So You'll see, guys, don't worry, with time, you will start to follow much easier the signals, the setups, etc. Okay, so don't hesitate. And yeah. Okay, guys, I will see you all very soon. Have a great day. Okay, thank you very much for joining. Let's go.